Hello, and welcome to our channel. Before we dive into today's topic, we need to make one thing clear. We're here to explore the intriguing comparison between the traditional stock market and the emerging world of cryptocurrency. However, it's crucial to remember that this video is purely informational and not intended to serve as financial advice. Always do your own research before making any investment decisions. Now that we've got that out of the way, let's delve into the fascinating world of investing. First off, we explore the traditional investment avenue, the stock market. Picture it as a bustling marketplace where pieces of ownership in companies, known as shares or stocks, are bought and sold. These transactions take place on exchanges like the New York Stock Exchange or the Nasdaq. As an investor, when you buy a stock, you're essentially buying a tiny slice of that company, becoming a partial owner. If the company does well, the value of your shares goes up. You can then sell these at a higher price, thus making a profit. On the other hand, if the company doesn't fare well, the value of your shares might decrease. The stock market, like any other market, operates on the fundamental principles of supply and demand. If a company is performing exceptionally well, more people want to buy its stocks, pushing the price up. On the contrary, if a company is underperforming, people want to sell its stocks, driving the price down. Investing in the stock market isn't a guaranteed path to riches, though. It carries its fair share of risks. Companies can underperform or even go bankrupt, and stock prices can fluctuate wildly based on a variety of factors, including economic indicators, political instability, or even natural disasters. That's where the importance of diversification comes into play. By spreading your investments across a variety of stocks, you can protect yourself from the failure of any one company. Yet despite these risks, the stock market has been a cornerstone of the global economy for centuries. It offers an established and regulated platform for individuals and institutions to grow their wealth. History has shown us that while the stock market may experience periods of volatility, it has generally trended upwards over the long term. So, the stock market offers an established, regulated platform for investment, but it's not without its risks. It requires a well-thought-out strategy, patience, and an understanding of market trends. But remember, as with any investment, it's critical to do your own research before diving in. Now, let's shift gears and talk about the new kid on the block, cryptocurrency. Cryptocurrency, in its simplest form, is a digital or virtual form of currency that uses cryptography for security. It operates independently of any central bank, making it immune to government interference. The most popular example of cryptocurrency is Bitcoin, but there are thousands of others, each with its own unique features and uses. Cryptocurrencies work using a technology called blockchain. Blockchain is a decentralized technology spread across many computers that manages and records transactions. This technology promises greater security than traditional financial systems and has the added benefit of being transparent. One of the key features of cryptocurrency is its potential for high rewards. For example, if you had bought $100 of Bitcoin back in 2010, it would be worth millions today. But this potential for high rewards also comes with high risks. The value of cryptocurrencies is highly volatile. For example, Bitcoin's price has been known to fluctuate by thousands of dollars in a single day. This makes investing in cryptocurrencies a risky proposition. Another key feature of cryptocurrency is its relative novelty. The first and most well-known cryptocurrency, Bitcoin, was only created in 2009. This means that cryptocurrencies have a relatively short history compared to traditional investments like stocks or bonds. It also means that the laws and regulations surrounding cryptocurrencies are still being developed and can change rapidly. This can add an additional layer of risk to investing in cryptocurrencies. Cryptocurrency is also characterized by its accessibility. You can buy and sell cryptocurrencies 24 hours a day, 7 days a week. This is in contrast to the stock market, which only operates during certain hours of the day. Cryptocurrency offers a potentially lucrative, though highly volatile, platform for investment. It's definitely not for the faint-hearted. Now that we've got a handle on both the stock market and cryptocurrency, it's time to compare them head-to-head. And remember, we're not financial advisors, so always do your own research before making any investment decisions. Let's start with risk. Both the stock market and cryptocurrency come with their share of risks. In the stock market, risks can be associated with market volatility, economic indicators, and the performance of individual companies. On the other hand, the risks in cryptocurrency are tied to its relatively young nature, volatility, and the regulatory environment. which brings us to potential returns. The stock market has historically provided steady returns over the long term. It's a tried and tested investment avenue. Cryptocurrency, however, is a different beast altogether. It's not uncommon to see massive swings in value, which can provide substantial returns. But remember, with high reward comes high risk. Next, let's talk about accessibility. The stock market has been around for centuries, and it's fairly easy to get started with a brokerage account. Cryptocurrencies, on the other hand, are a recent addition to the investment world, but they have gained popularity due to their easy accessibility. All you need is an internet connection and a digital wallet, and you're good to go. Now, on to volatility. If you've been paying attention, you've probably noticed this is a significant factor in both markets. The stock market can be volatile, especially during periods of economic uncertainty. But compared to cryptocurrencies, it's a walk in the park. Cryptocurrencies can swing wildly in value even within a single day. This can be a boon for day traders and those with a high-risk appetite, but it's certainly not for the faint-hearted. Finally, let's discuss regulation. The stock market is heavily regulated by government bodies like the Securities and Exchange Commission in the United States. Regulations are in place for investors and maintain orderly and efficient markets. Cryptocurrencies, however, operate in a largely unregulated environment. Some argue this gives them the freedom to innovate, but it also leaves investors vulnerable to scams and market manipulation. As you can see, both investment avenues have their unique features, and the choice between them depends on your personal risk tolerance and investment goals. Whether you choose to invest in the stock market, cryptocurrencies, or a mix of both, always remember to do your research and never invest more than you can afford to lose. To wrap things up, investing, whether in the stock market or in cryptocurrency, is not a decision to be taken lightly. Both avenues come with their unique sets of opportunities and challenges. Let's quickly recap. The stock market has been around for centuries and is considered a traditional form of investment. It's regulated, predictable to an extent, and offers dividends on certain investments. On the other hand, cryptocurrency, a relative newcomer, is a digital or virtual currency that uses cryptography for security. It's marked by its volatility, potential for high returns, and relative lack of regulation. The key differences between the two lie in their nature and underlying technologies. While stocks are a claim on a portion of a company's assets and earnings, cryptocurrencies are standalone assets. And while the stock market operates within set hours and is overseen by regulatory bodies, the crypto market operates 24 hours a day, 7 days a week, with no central authority. When choosing between the two, consider factors like your risk tolerance, investment goals, and the time you can dedicate to tracking your investments. It's also crucial to stay updated on market trends and news that could impact your investments. Thanks for watching. Don't forget to like, comment, and subscribe. And hit the bell notification so you'll get updates anytime we upload a new video. Remember, always do your own research before making any investment decisions. Until next time, happy investing.